Let's first look at the handover that we are getting from the Wall Street. Well, the stocks on the US indices closed higher for a third straight day, fueled by tech gains. The S&P 500 ended 2% higher, while the tech-heavy Nasdaq Composite rallied almost 3%. Though Dow Jones Industrial Average lagged the other two indices, weighed down by a 6% drop in IBM, it still advanced over 480 points to settle more than 1% higher. In fact, this marks the blue chip index's first close above the 40,000 level since April 15th. Shares of Nvidia, Meta, Amazon, Tesla and Microsoft all closed higher, which propelled the major averages to their third day of gains in a row. Meanwhile, Alphabet, the parent company of Google, saw its shares rise more than 5% in after-hours trading after the firm reported a stronger than expected first quarter growth. Remember, tech has been rocked recently as the White House's increasingly confrontational trade stance, particularly against China, dents sentiment on the sector. Meanwhile, China said overnight that there were no trade talks taking place with the US. China's Ministry of Commerce spokesperson said all sayings, as I quote, regarding the progress on bilateral talks should be dismissed. He also called for cancellation of unilateral tariffs. Now, with this lack of trade negotiation progress in China in mind, some analysts have said that they were cautious about yesterday's upward rally. In fact, the UBS strategist has said that the US is increasingly approaching a recessionary regime, which the markets are pricing rapidly. In fact, several other companies have also lowered their guidance for the fiscal. Still, investors received some good news when US Treasury Secretary Scott Bessent said that the Trump administration may reach an agreement on understanding on trade with South Korea as soon as next week. Now, remember, since April 2nd, the date the tariff policy was announced, the S&P 500 has slipped over 3%, Dow has declined 5%, while the Nasdaq has lost 2.5%. Currently, the major averages are pacing to end the week on a positive territory, which would mark the second positive week in 3 for all the 3 indexes.
Okay, so that's the take coming in on Wall Street and looking rather good. It's been a good week for Wall Street overall as well. But that should focus and talk about oil prices because they were little changed yesterday as investors weighed a potential OPEC plus output increase, mixed economic news, conflicting tariff signals from the White House and news from the Russia-Ukraine war. Let's take stock of what both of these major counters are doing. WTI is almost at $63 per barrel, Brent at $66.7 per barrel. Now on Wednesday, remember, Trump said Ukraine's leader was hampering peace talks on ending Russia's war in Ukraine, which could allow more Russian oil to flow to global markets. Still, many European countries are trying to phase out import of Russian oil due to the war. European Commission President Ursula von der Leyen has said that the Commission will present a roadmap in the next 2 weeks on keeping an EU pledge to quit Russian fossil fuels by 2027. Russia, remember, is a member of the OPEC Plus group. Reuters also reported on Wednesday that several OPEC Plus members had suggested the group accelerate oil output increases for a second month in June. On the back of that, flattish moves coming in from WTI and Brent as well, but a steady increase coming in across both of those counters. Let's just focus and talk about gold. Gold prices gained yesterday after falling more than 3% in the previous session. This was helped by a subdued dollar and bargain hunting, while market attention remained focused on any updates on the US-China trade relations. Spot gold was up almost 1.5% to $3,334 an ounce. US gold futures have also settled at 1.7% higher, coming in around $3,348.6 per ounce as we speak.
If you like this video, then like, share and subscribe to ET Now.